While everyone was distracted, trillion-dollar giants have been quietly buying Bitcoin stocks. A $1.4 trillion bank was just exposed for buying nearly $250 million of MSTR, but they're not alone. One of Bitcoin's biggest critics has also been exposed for not only buying Strategy, but now buying Metaplanet this week. Of course, before we reveal what that $9 trillion giant is doing, let's dive into the first giant who just adopted Bitcoin. And it's a relatively unknown French baking giant. Even though they're huge, I never heard about them, but hey, they're diving into Bitcoin very deep. And of course, I'm not alone. I do have my favorite Zoomer, MITCHELLHODL, here from Blockware Solutions. And we're going to be, it might be a spicy topic later. We're going to be talking about the end of the 4-year cycle. You guys know I've been quoting Mitchell on the show for a while. He's going to come on the show, make a case for that. Maybe we'll go back and forth. He was trolling me a little earlier about even using the verbiage of cycles here. So we're going to have a good combo at the end. Anyways, let's dive into these news stories. So Bitcoin treasuries, they've been covering all of the institutions and companies that are coming into Bitcoin. They just posted that a French multinational investment bank, Natix, I don't know how to say this. Natixis? I don't know. Forgive me, guys. Has bought $148.4 million worth of Strategy and are now holding 715,598 shares. Basically, around $240 million of MSTR. And this is the trend that we've been seeing go around all year long. These institutions, maybe they're not comfortable buying Bitcoin yet, but they're very comfortable with buying Bitcoin stocks, or as we like to call it, Bitcoin exposure. So as we've seen for a while, it's becoming very clear that you can tacitly, indirectly have exposure to Bitcoin, but going full bore into Bitcoin, spot Bitcoin right now it's still not really the flavor of the month. Yeah, you might buy some Bitcoin ETFs, but they're more comfortable buying these stocks. And do I really blame them? Not really. As Saylor's been showing us for a while, it's obviously got a lot of appetite from these institutions here. They want to get Bitcoin exposure. You could argue they just want the Bitcoin gains, but hey, baby steps into this market, and we're seeing they're coming in very fast, and they're not the only one. The next story is a little more interesting, but I'm going to pass it over to Mitchell real quick. We've seen this trend, and this does lead into your argument of the end of the 4-year cycle. So let's not, let's not blow our load on the end of the 4-year cycle. Let's just talk about the institutions kind of dipping their toes into Bitcoin through these Bitcoin stocks. And of course, I don't know if you guys remember, but MITCHELLHODL was very famous, or rather maybe infamous, for asking Saylor about him, why he doesn't hold his keys, whether he's going to hold his keys. And so you've been in the heart of this story here of institutions coming into Bitcoin, but they're not really fully into Bitcoin yet. They just see Bitcoin stocks as an easy way, maybe a convenient way for them to get Bitcoin exposure. So what's your thoughts on this trend of the institutions coming into Bitcoin via the Bitcoin stocks?
That's a great question. And thanks again for having me on the show, Opti. It's always a blast to join you guys here on Simply Bitcoin. And this is Bitcoin now. Like it or not, it's institutions you've never heard of making $100 million plus deployments into the asset. And like you said, they're here for number go up, for price appreciation, exposure, preservation of capital, however you want to slice it up. They're not here for freedom tech. They're not here for peer-to-peer transactions. They are here because Bitcoin is a great asset to hold for the long term, just like real estate, equities, gold, etc. Bitcoin is now part of that bucket of assets that institutions are willing to allocate capital to. And like you said, they're not buying Bitcoin directly. They like familiar interfaces. They like buying equities. They like buying securitized products. And so, of course, they're buying Strategy stock, which is ironic a little bit because it's more volatile than Bitcoin, which Bitcoin's volatility is kind of the number one thing many institutions cite for why they don't buy Bitcoin. But this is part of the story. And I think it's been said, ad nauseum in the Bitcoin world, but store of value happens first. Medium of exchange and unit of account happen down the line. So I think this is all part of Bitcoin's natural progression to becoming the world's premier store of value, premier medium of exchange, and premier unit of account.
Yeah, totally. And Mitch, I've been thinking about, I think we've been talking about this on the show for a while now, but I want to get your opinion of this. Do you think that the institutions now coming into Bitcoin, I know there's been a whole conversation about Bitcoin being co-opted. What would be your take on this? Do you think because the institutions are here, because it does feel that the separation of money and state meme is kind of getting a, you know, backward push here. It's not like the headline anymore because the institutions are here, because the very people that Bitcoin was supposed to disintermediate are in the space now. Do you think that I don't know, neglects, or rather disproves this idea that we are all here for: freedom money, the separation of money and state? Or, as you kind of just said, this was the inevitable path we were going to take?
Yeah, not at all. It does not change that one bit, because for one, we can't stop the institutions from joining. So if Bitcoin could gatekeep the institutions out, then inherently it would not be freedom money, because institutions at the end of the day are just groups of people. And so groups of people voluntarily electing to use Bitcoin as a store of value, we can't stop that. And that's a good thing. Second, institutions joining the Bitcoin network doesn't stop you from buying Bitcoin, taking it into self-custody, mining Bitcoin, running a node. The actual underlying blockchain, the time chain, whatever you want to call it, the Bitcoin network does not change one bit. It doesn't even know who's interacting with it, right? It doesn't know if it's an institution or if it's retail or if it's someone in a third world country selling bananas and using it to save Bitcoin. Like, none of that really changes. This is all part of the USD side of the equation, right? So you have BTC USD as the exchange rate. All of this just affects the USD side of it. The Bitcoin part doesn't really change at all. And furthermore, we should want institutions to come into the network and to start accumulating Bitcoin, because that's the only way Bitcoin can get to $1 million. Retail was perfectly capable of getting Bitcoin from a $0 asset to $1 trillion asset. But if Bitcoin's going to get to a $20 trillion market cap, $50 trillion market cap, if it's really going to dominate the world in the way that many Bitcoiners would like, you have to have institutions. Like, retail simply does not have enough resources to pump the price up that much.
Yeah, no, I would totally agree. And it is interesting seeing a lot of Bitcoiners. I know you probably saw there was kind of the rumors going around that some of the OG whales were selling out because the institutions are embracing us. And from my perspective, I'd agree with you 100%. It's like, this just seems how the natural progression of Bitcoin was going to be. And I use that same example all the time. Like, guys, if you think it's just going to be retail that takes Bitcoin to $100 trillion plus market cap, like, I don't think you understand how capital markets work. Like, I don't think you understand where all the capital actually is. And I know we were kind of trolling Saylor a little bit in the beginning, but like, a lot of the projects that he's creating right now is literally designed for that exact task. And so, as much as I would also love to see these institutions and high net worth individuals, and of course retail and just grassroots movement of people adopting Bitcoin, I think this was the way it was going to happen. If you think Bitcoin is going to ridiculous market caps, ridiculous price moves, the institutions had to get in here. And now you're seeing that they are feeling comfortable coming into Bitcoin. And maybe it's not how we wanted them to originally. Of course, a lot of us Bitcoiners were maybe a little naive in the beginning. We fully didn't understand the whole macro landscape. And now that we are maturing, we are starting to understand how all of the world's capital actually moves and how it actually works. And I would agree with you. Like, this was how we were going to get Bitcoin to the next level, is these institutions coming. And so I also believe that it doesn't disprove the thesis of Bitcoin separating, money from state. It's like, hey, I've been saying it on the show, and I'd like to hear your thoughts before I move on to the next one. I was like, guys, if you are one of these people that are in the traditional financial system, like, they probably need capital preservation as much as we do, if not more. If you have a lot more to lose, you're probably looking at Bitcoin like, hey, I may not fully believe this. We've heard Jamie Dimon Jamie Dimon say this. It's like, I may not actually believe in this, but I'm seeing what it's doing. And if you have hundreds of millions of dollars, or if you're a bank with $1 trillion market caps, you're looking at Bitcoin, you're like, well, we are seeing some trouble in the system. And if this little tiny thing can protect us, you better bet that they are taking this thing very seriously, especially now that Bitcoin has entered the geopolitical and macro conversation right now. So I'm with you. I fully abide by the Bitcoin is for enemy memes. It's like this is how it was going to happen. So I totally agree with that, Mitch. Anyways, let's go to the next news, because this one's a little more interesting. It's a similar kind of vein, but we saw this morning that Vanguard now holds a position in Metaplanet. It's not as big of a position. Hold on. It's a smaller position, $50 million in Metaplanet. But I think the most interesting aspect about this is, of course, the Vanguard CEO was very famous, or rather maybe infamous at this point, for when the Bitcoin ETF was launched, saying, hey, we're never going to launch this product. So now they are, I think, still the biggest holder in MicroStrategy. And now they just started to allocate to Metaplanet. So I know they got that CEO out of there, and they're still not allowing their clients to get into Bitcoin ETFs. But it's really one of those of, watch what they do, not watch what, or not. Yeah, don't listen to what they say here. Like, they're getting Bitcoin exposure some way. Maybe they won't let you do it yet, but if they're doing it, it's probably a good move, whether you like them or not. It's like, yeah, Strategy is going to be the best performing, if not the biggest company in the US. And Saylor's been saying Metaplanet is going to be the biggest company in Japan. And Vanguard's sitting here like, yeah, we're not going to let our customers buy Bitcoin ETFs. We're not even going to allow the ETFs to be on our platform, but we're definitely going to get exposure in this, which I think is really showing how big these Bitcoin treasury companies are going to be, whether you like them or not. I'm not the biggest Bitcoin stock guy, but it is showing us that there is an appetite for these stocks. There is an appetite for these products. And the quote unquote smart money is seeing the same things we're seeing. They got a huge holding in Strategy. Now they're starting to deploy capital in Metaplanet. It's ironic and it's hilarious at the same time. Like, with one side of their mouth, they're like, yeah, this Bitcoin thing's bad. With the other side of their mouth, they're like, yeah, we're going to buy a bunch of shares in these companies that literally all they do is buy Bitcoin. I think this is a sign of the times where we are right now. They're still staying away from Bitcoin per se, spot Bitcoin. But if they can get their gains and their exposures through these products, they're obviously going to do this. It's just a crazy year it's been so far. So, Mitch, what's your thoughts on Vanguard? On the one hand, they're like, yeah, we don't want this Bitcoin. And then they just constantly get exposed for buying Bitcoin stocks. Like, what is their thinking here?
Yeah, the hypocrisy is off the charts. And one might say they're vanguarding their clients from great returns by blocking them from buying the ETF. But it's like you said, watch what they do, not what they say. And for them, $50 million, that's chump change.
Yeah.
It kind of alludes to your earlier point, which is in their shoes, it's like they have so much to lose if this Bitcoin thing is right. If Bitcoin does become the world's #1 store of value, for them, it's a very much an asymmetric bet. Throw $50 million here at Metaplanet, throw another couple $100 million at Strategy and some of these other Bitcoin proxies. And that gives them enough hedge, enough exposure where when we're right about Bitcoin, they'll be okay. These institutions will survive. And so it's kind of, if you game theory it out, which that word gets beat to death in the Bitcoin world, but if you really apply game theory, it makes sense that all of these institutions will get at least a little bit of Bitcoin exposure. And then when you run the numbers on these massive $1 trillion capital managers putting just a little bit into Bitcoin, that's going to have pretty profound impacts on the current exchange rate.
Yeah, you reminded me of, I forget who posted the report. I know James Lavish has done a few presentations on it, and he basically ran through the numbers and was showing if you simply put like 1% of your portfolio into Bitcoin, or at this point, Bitcoin stocks or Bitcoin exposure, not only will that protect you if there is a 99% meltdown to the rest of your portfolio, but soon enough, over 4 or 5 year time span, that 1% is going to be a large portion of your portfolio because of Bitcoin's price appreciation. So even though for us, like buying a $50 million bag of Bitcoin would be like, all right, bet, like we're good to go. For these institutions that hold, Vanguard holds about $10 trillion in assets, or rather, they have $10 trillion of assets under management. Throwing 50 million at Bitcoin is just like, whatever. It's a rounding error. They probably didn't even think too much about it. And for us, it's like, okay, it's really showing us that they may not be fully on board with Bitcoin, but they're starting to look at it very seriously. I saw I think Marty Bent tweeted this, or TFTC tweeted it the other day, and it was the idea that essentially only 3% of hedge fund managers have invested in Bitcoin, which in another way of saying is like, 93 to 99.7% of capital hasn't even made it into Bitcoin yet. And we're still thinking that, oh, hey, the cycles are over, bro. This is the top, man. No more pumping Bitcoin. This is the end of it. And we're going to chat about this later, because I have been saying we are on the verge, I think, of this quote unlimited bid into Bitcoin. And I think this is where you and I overlap on this idea of the 4-year cycle ending, is like what we're seeing. If we are correct in what we're seeing in our analysis of the situation right now, they're basically dropping pennies into Bitcoin. And once they actually go forcefully into Bitcoin, whether that's next year or 2027 or, before 2030, this might be, the super cycle meme we all really want to believe in. It's like they're literally dropping pennies into Bitcoin, and it's making huge splashes to us. So it really does lead to, this is just beginning. And I think that's probably where you take the end of the 4-year cycle, right, Mitch?
Yeah, more or less. And we'll dive deeper towards the end of the show. But there's this kind of loop that gets created with institutional adoption, because like you said, they're dripping pennies. They don't girth their entire $10 trillion portfolio in at one time. They basically dollar cost average, but in numbers that are far bigger than what you and I and the rest of the plebs could put together in the aggregate. And so as more of this institutional capital enters the market at this kind of snail's pace almost, Bitcoin's volatility, and this is objectively true, decreases. Bitcoin is far less volatile now than it used to be. And the fascinating thing about that is that gives institutions more of a green light to get into Bitcoin, because the volatility is down. And so it kind of creates this perpetual feedback loop where more institutional capital draws down Bitcoin's volatility, which invites in more institutional capital and just continues to kind of rinse and repeat. And my base case is Bitcoin stairways. It's a stairway to heaven, right? We're going to stair step higher to $1 million over the next 10 years through, Bitcoin's going to go up a little bit, 25 to 50%, consolidate for a few months, up again, 25 to 50% more consolidation, and on repeat until we get to some pretty large numbers.
Oh, man, Mitch, what Mitch just said is the Ponzi is over, boys. Wrap it up. It was fun while it lasted. No, I'm trolling. But I do want to hit a question here. Anthony Jones in the chat goes, I don't understand the appeal of ETF Bitcoin. Personally, I would agree with you. As an individual, it kind of makes no sense to me as someone who doesn't have a lot of capital, really, sitting on the sidelines. But the appeal, and it's the same appeal you're seeing from all of Saylor's products, Strike, Strife, I forget what Stride. There's so many of these products now. It's hard to organize them. But the idea is essentially, and maybe Mitch can elaborate on this as well. Is like the idea is most capital is stranded in TradFi. I don't know if you guys saw Saylor say it the other day. It's like Bitcoin is recycling capital right now. So for us, if you have money on the side, basically, if you're saving dollars under your mattress, obviously you should just be buying spot Bitcoin. That's the best way to be doing this. But if you are maybe a more high net worth individual, or you are, have red tape around what you can actually invest in via, regulations and capital controls, then these ETF products and these strategy products are literally designed purposefully for these institutions and for these investors to get their capital into Bitcoin. So while this might not make sense to you to buy an ETF, It makes sense for a lot of other people because it's hard for them to get their capital directly into Bitcoin. And we've literally only seen about a year and some change, the ability for all of this capital to get into Bitcoin. And that's what these products are designed for. It's not necessarily for retail, though I'm sure retail out there, maybe like, our boomer parents are just more comfortable with trading on Charles Schwab or something like that. And seeing these products easily for them to get their capital into a Bitcoin exposure product, it's just convenience, really. But there is a lot of capital that can't get into Bitcoin without taking, crazy penalties or a lot of, loopholes for them to get that capital into Bitcoin. It's just an easier solution for them. And that's what we're seeing happen right now. The solutions are being made for capital to flow into Bitcoin easier. And so for you as an individual, it probably doesn't make too much sense. You're like, why would I buy an ETF when I can buy Bitcoin? Like, why would I add a middleman into my Bitcoin exposure when I can just buy it directly? That's how you should be thinking as a sovereign individual. But for people that still have capital in these markets and traditional vehicles, this is what these products are designed for. So, Mitchell, I don't know if you want to add to that.
Yeah, that was spot on. Really, the simplest answer is they can't buy Bitcoin directly.
Yeah.
Of course, individual people, like I don't have any IBIT. I say this to someone with no Bitcoin ETF exposure whatsoever. I prefer cold storage Bitcoin, but the most basic example, like you mentioned, is the boomer. They've been saving in retirement accounts their entire life. They don't want to, maybe they're close to retirement. They don't want to take a tax penalty to get those funds out and buy Bitcoin when they could just buy IBIT or FBTC right within their native account. And then you extrapolate that to the highest capital allocators in society. It's not that they don't necessarily want to buy Bitcoin and take self-custody, but oftentimes they can't. Bitcoin's such a new asset. There's so much for them, restrictions, red tape, like in terms of just the custody alone. So they want to use the interface they're familiar with, which is going onto their brokerage account and just clicking buy. It's a lot more simple. They have far fewer things to worry about. And that's where the vast majority of the world's capital exists. It's in institutions like this.
Yeah, totally. And it's funny. It's funny just kind of reflecting on this. A lot of us Bitcoiners learned about the traditional financial system through the lens of Bitcoin. And we really forget the amount of friction that is built into traditional financial vehicles that make it extremely hard for investors to get their capital out. And obviously that's by design. I'm thinking of I think it's Wolf of Wall Street meme where he's like, the goal is literally keep them on the corral, on the roller coaster forever. And as long as you keep them on the roller coaster, then none of this is ever actually real and the banks can take their money. That's the whole goal, to make sure that your capital that you put into Wall Street never leaves Wall Street. Like, they don't want you to get your money out. They want it to continue to get played because that's how they make their money. And so there's a lot of friction built into these systems so that it's hard for you to get your capital out. And we're seeing Bitcoin obviously disintermediate this, or rather maybe Bitcoiners, not necessarily saying Larry Fink is a Bitcoiner per se, but hey, they built the product so that the capital can find leakage into the Bitcoin system. And again, it's super early. This is just the beginning of it. And I know we've been getting a lot of flack recently because we have been talking a lot about institutions and Saylor. It's because that is the hype cycle right now. It's seeing institutional capital flow into Bitcoin. And, we're a news show. We're a daily news show. So this is where the attention is right now. But it doesn't mean that the real revolution here is not buying Bitcoin directly. So if you're one of us, if you're a low IQ, 42 IQ person like myself, and you're like, dude, I just buy Bitcoin, I stack it, I put it in the cold storage, like none of this even matters to me, I am totally with you. Stack Bitcoin and chill. This is the way. But as we're seeing a new type of investor come into the market, all of this stuff does appeal to a broader market of people that have money, have capital trapped in the traditional financial system, and they're trying to find ways to get that capital into Bitcoin. And so as much as we may not like it from a more cypherpunk sovereign individual ethos, this was how the game was going to be played. And we're gonna break this down later on in the show, because I literally brought Mitchell on today so that we can talk about the end of the 4-year cycle. So tail end of the show, if you like this conversation, we are going to expand on this a lot more. Okay, guys, of course, I do want to remind you to smash the like button, comment on the show, tell us what you think about the show, and of course, hit the subscriber button. We drop the best and the most content on YouTube, period. And before I keep it moving, got to give some love to our boys over at the Bitcoin Well. If you are sitting on the sidelines, if you are watching all of this stuff and you're wondering how you can get your personal capital into Bitcoin, make sure you go to bitcoinwell.com/simplybtc, scan the QR code here, and you get 3 chances to win 1 million sats. I will be giving Bitcoin away at the end of the show. Guys, remind me, because sometimes I do forget. So spam me in the chat later. But when you scan the QR code, you get 3 chances to win 1 million sats, which is what, about $1,100 today. And every time you buy Bitcoin or refer friends, you get more chances to win. Of course, the reason we love Bitcoin Well is because they do it right. They will never lose your Bitcoin. They have never lost your Bitcoin because they never hold your Bitcoin. Your Bitcoin goes directly into your cold storage. This is the way, guys. We've seen throughout the history of Bitcoin so many exchanges go down. And I actually have a story about this for you guys today coming out of Canada that is absolutely insane. We live in wild times right now. They're Canadian, but they can't do this to Bitcoin Well because they never hold your Bitcoin. This is why we partner with them. Anyways, let's get into the rest of the show. I'm going to troll a little bit, guys. Dude, Gerry Gensler's back. Dude, he sounded like a maxi again. Sorry, guys. I got to plug this. And then, like I said, pretty insane news story coming out of Canada and a quote-unquote crypto exchange that is just, it's wild. It's wild times here. So let's keep the show moving, and we will get into it right now.
I want to give a shout out to our partner, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? Stampseed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates. Instead of just writing them down on paper, paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on Stampseed and use promo code SIMPLY to get 15% off anything on the Stampseed.com store.
Alrighty then, guys. We are over here on Clark Moody's dashboard, bitcoin.clarkmoody.com. Gotta love the dashboard. Anyways, the current Bitcoin price is 115,940. Guys, we were at like 117 yesterday, woke up to a dump. Gotta love this. It's just so much fun when Bitcoin's a stable coin. Anyways, we are at a negative 6.8% decline from all-time high. The market cap in fiat terms is 2.31 trillion. And the current block height, the only real time that matters is the block height of Bitcoin. It is currently at 915,439. That's the only true time in the world, is the block height. Okay, guys, as I was telling you, Gerry Gensler is back. And in hindsight, 2020 hindsight and all that good stuff, man, maybe we were kind of blessed with Gerry. I'm not gonna lie. Maybe he was doing a lot more good for us than we wanted to believe. But let's just play the clip, and we're gonna troll a little bit. It's Friday. We troll a little bit. So here's Gerry Gensler on Squawk Box. Or wait, was it Squawk Box? Whatever. MSNBC or CNBC.
So when I look at the field that trades mostly on momentum, mostly on, frankly, hype for investors.
You think this is dangerous, what they're doing?
I think that for investors, everyday investors, the 5 to 10% of Americans who invest in crypto, and it's hard to get the real, but that it's a highly speculative, very risky asset. And in most of these tokens, put aside Bitcoin, but most of the other tokens are not tied to any fundamentals. And there's 5 or 10,000 of these tokens. So usually over time, you find new equilibriums.
Yo, I'm a Gerry Gensler maxi, guys. He sounds like a maxi here. It is interesting how his rhetoric has changed since he got out of office. For a while there, he was like, I'm not going to give any official opinion on this stuff. He gets out and he's like, yeah, put Bitcoin aside. Everything else is trash. And you're like, okay. So he did know what he was doing when he was the head of the SEC. And I think there's probably a few factors playing out here. Obviously, the new chair, Atkins, they're a lot more pro Bitcoin, or rather pro crypto friendly. So maybe this is a jab at the current head of the SEC, because they do seem to be unleashing the shitcoin tidal wave right now. They're like, I think this last week we saw them say like, oh yeah, a lot of these crypto tokens don't fall under securities laws. Gerry Gensler was a huge advocate of the Howey test. Now he's out and he's like, yeah, Bitcoin is different than everything else. I wouldn't be investing in anything else, though he's still playing on the idea of Bitcoin being a risky speculative asset. So maybe he knows who he's talking to. He knows his audience at this point. But I don't know, man. Mitch, sounds like Gerry was a maxi this whole time, as we thought he was.
I think he always was, because he gave a speech at MIT back in like 2013, and he broke down Bitcoin on the most technical level, and he was spot on about it. So I think he's known this whole time. It's unfortunate that during his tenure, honestly, I'm all for like, let's regulate crypto. Like, grandma shouldn't be going on FTX and like getting totally rug pulled. Like, there's definitely some shady stuff going on in the crypto world, the ICO scams, all these pump and dumps. Like, I'm all for shutting that stuff down, but his administration allowed that to bleed into Bitcoin, because Bitcoin companies were getting attacked just for simply offering, they were getting debanked, getting deplatformed from marketing providers and other types of businesses just for being, even Bitcoin only, not even having anything to do with these other cryptos. So he probably is a Bitcoin maxi, but I don't think he did a good job as the SEC chair, and I'm certainly glad he's out.
Yeah. Guys, I'm literally, every time I bring Gerry Gensler on, it's just like a running troll here that he was really a Bitcoin maxi. Though, I mean, under his, tenure, of course, the Bitcoin ETFs did launch. And my whole troll was essentially this idea that the reason he delayed the Bitcoin ETF for so long is because he wasn't sure how to stop the tidal wave of shitcoin ETFs being launched. And so that's, being gracious here, that's why it took him so long. But to your point, Mitch, I think that is probably the biggest signal here, that even if he was a true believer in Bitcoin, and yes, he launched the Bitcoin ETF under his watch, et cetera, the damage that he did to the industry at large by trying to kind of stop all of this from happening, it really had ramifications for the Bitcoin industry at large, or just, like all of the stuff that was happening with the, enforcement by regulation rules they were doing. Like, we had just no idea what was going on. We had no idea what was okay, what was not. So as much as I like to joke about him being a maxi, I think your point is true here, that like, yeah, maybe he was, but when he got in that position, he obviously had to change tune, and he tried to stop the floodgates from happening, and it really did a lot more damage than good, even though he launched the ETF, it was under his watch. But we're seeing now the new SEC chair, Atkins, they're flipping 180% on their view on Bitcoin and even crypto. Like, they're literally like, all cryptos are good now. They're not securities anymore. And we're like, oh shit, maybe we got more than we asked here, and be careful what we wish for and all that stuff. Cause I don't know, man, it's looking like the floodgates are opening up.
I don't know. I think the altcoin world already blew their load within the first month of the administration, right? Because we had the Trump coin, the Melania coin, we had the whole Dave Portnoy thing, and all that feels like a lifetime ago. But I mean, that's pretty much it, right? I think Bitcoin doesn't need the altcoin world to be regulated in order for Bitcoin to win out. Bitcoin wins out in the free market and the free market of ideas because it's simply a better asset. It doesn't have these, Solana pump and dumps with these pre-mines and all this gimmickry going on. It's Bitcoin, right? It's origin. There was no, it was purely natural, right? What they call the natural conception. Nobody got a pre-mine. Nobody got Bitcoin before anybody else. It's been perfectly fair and open and available to everyone from the very beginning. So it doesn't have any leadership and control. There's no head. There's no any of the shenanigans that go on in the crypto world. And so I think the market can figure that out on its own without the government having to kind of regulate crypto into obsolescence.
Yeah. It's I totally get the perspective of trying to protect, mom and pop, as we've seen this year. And we haven't really covered it too much, but we have seen a rise in, crypto scams. And I mean, I'm sure if you guys had been on Coinbase before, you're getting the messages constantly. I had one of my friends text me, like we literally got on a call. I haven't talked to him in like a year. And he called me and he was asking, he's like one of my only friends that actually listened to me and bought some Bitcoin. And so I was kind of telling him, updating him about, the whole Trump administration, all of the kind of narrative shifting, the institutions getting into Bitcoin. And he was like, oh man, all right, well, it might be a good time for me to buy some Bitcoin now again. And I'm like, yeah, it's probably a good time. I wasn't being a full hard shill on him. I'm like, yeah, it's probably a good idea. And literally the next morning he texted me and he's like, yo, like, what is this text message? And it was a screenshot of like a Coinbase, your account has been activated or something. He's like, what is this? I'm like, oh, that's a scam, dude. Don't worry about it. And he's like, yo, this is freaky that I haven't talked about Bitcoin at all. We get on the phone and the next morning I get these texts and it's like, yeah, I didn't want to go into like there is a rise in scams recently, whether it is through text messages, emails, the ATMs. There's been a lot of ATM scams. So like, even though we are seeing the proliferation of Bitcoin and for better or worse, crypto, the scams are rising. So again, we'll give some credit where it's due, and it's hard to hold back this whole technological revolution without a lot of people that aren't well informed getting burned. And as much as you want to protect people from this, I don't think the way they did it during Gerry Gensler's tenure was the right way to go about it. Obviously, this is why we try to go on the show and educate people. And essentially, you get scam texts and emails just like, don't respond. Maybe call your exchange directly, and then they'll tell you, oh no, that's a scam. So there is a rise of scams going on right now. So kind of take the good with the bad here. You are seeing scams rise. Maybe they were holding the floodgates back. And like you said, if this new administration is going to be more crypto friendly, and I say that, without quotes, it seems like they're going to unleash the tsunami of scams. And from our perspective, if you're Bitcoin only, that's just cover for us. And it's like, okay, hey, if they want to unleash everything, then most people are going to figure out that Bitcoin's the only thing you really want to invest in. I mean, look, if you bought Trump coin or Melania coin or any of that stuff, or Yeezy coin, all of the coins from people, they're absolutely wrecked. And the only thing that is holding really good value is, of course, Bitcoin. This is why we're Bitcoin only. This is why the only thing you should be buying is Bitcoin. It also makes your life easier. Like, you don't have to think about anything. You don't have to look at TradingView every single day unless you want to, unless you're obsessed with the price. You just buy Bitcoin, store it, go chill. It's the easiest way to live. It literally simplifies your life. Anyways, let's go into the news, because we do have an interesting news story coming out of Canada. And then I might rip through this, guys, because I want to give Mitchell as much time as possible to break down his thesis on why the 4-year cycle is over. You guys know I've been talking about this on the show constantly. I've been constantly quoting Mitchell about this because I've been on the fence. As much as I really do believe Q4 is going to be extremely bullish, if you're looking at the Bitcoin market structure, things have fundamentally changed since the ETF was launched. And those are just facts you cannot ignore. So tail end of the show, we're going to have a huge conversation about the 4-year cycle being ended. But before that, you guys got to hear this story from Canada. It's absolutely insane.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledn.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
All right, guys, we are back. Okay, so check this story out. The Royal Canadian Mounted Police executes a record seizure of more than $56 million in cryptocurrency. So the Eastern region has carried out the largest cryptocurrency seizure in Canadian history. Thanks to the work of investigators specialized in financial crime, cybercrime, and cryptocurrencies, an estimated sum of over $56 million was recovered from the platform Trade Ogre. This also marks the first time that a cryptocurrency exchange platform has been dismantled by Canadian law enforcement. The money laundering investigative team opened the file in June of 2024, following a tip from Europol. The investigation found that the platform contravened Canadian laws and regulations. Specifically, it failed to register with the Financial Transactions and Reports Analysis Center of Canada as a money service businesses and did not identify its clients. Investigators have reason to believe that the majority of funds transacted on Trade Ogre came from criminal sources. The main attraction of this type of platform, which doesn't require users to identify themselves to make an account, is that it hides the source of funds. This is a common tactic used by criminal organizations that launder money. The transaction data obtained from the platform will be analyzed and charges may follow. The investigation is ongoing. So the news, maybe this news in and of itself isn't the biggest news story. What followed, or rather what preceded this official press release, is where the crazy news goes. And you're just like, what world do we live in right now? But anyways, the point remains the same for us here, which is what we constantly tell you. Do not leave your Bitcoin on exchanges. If you are a trader, which we don't recommend, maybe that's the only reason why you keep money on an exchange. But for everyone else, this is why it is so important to make sure you withdraw your Bitcoin from exchanges, because this could happen to almost any exchange. We've seen it happen in the past. We've seen it happen in the present. And you do not want to just leave your Bitcoin on an exchange, because you never know what's actually happening on the background. And you could wake up one morning like the people from Trade Ogre and lose all of your funds here. Now, of course, this exchange isn't that big, 56 million, not the biggest exchange, but the point remains the same. This is why we always harp on this idea of you need to withdraw your Bitcoin from exchanges because of this very thing. If you are just buying Bitcoin, you're only doing half of what you should be doing. The other half is taking that Bitcoin off an exchange. You need to secure the keys of your Bitcoin. So that's the initial PSA. But this is where things start to get a little interesting. So Lola, you guys know I love Lola. Her and The Rage, they've been doing really good coverage on stuff. She started covering this, and she goes, Canada sees 56 million from Trade Ogre customers because they have, quote, reason to believe. Again, It doesn't seem like they got facts here. They just have reason to believe that the majority of funds came from criminal sources. Why? Because it's a no KYC exchange. It's a common tactic used by criminal organizations to launder money. Again, no charges have been filed, and literally no actual evidence of criminal activity by Trade Ogre users appears to exist. But authorities are already considering forfeiting the funds on behalf of the state. And of course, they're asking for tips on illegal activity involving Trade Ogre. Naturally, I just called their hotline and let them know that I have credible evidence of $56 million of Trade Ogre funds being involved in theft. So look, they took down this exchange with just reasons to believe. There's no factual evidence here. And the craziest part about this is how we all heard about this, is how the public learned about this before we got the press release. And apparently the Canadian police announced the asset seizure in an op return or something. You can see here, crypto assets controlled by the RCMP Crypto Actics Control pour la GRC. So they officially announced this in an op return before we got the official press release. And like, what is going on? They seized the exchange. They announced it in an op return before we get the press release. Maybe the Bitcoin Knots guys are right about stuff. But what wild times, guys. Like, we heard about this in an op return, that this exchange was shut down, that they seized $56 million, basically on a hunch. And then they later confirmed this in an official press release. Like, what is going on here? We live in such strange times. They're going to shut down an exchange, and they're going to do an op return message that, yeah, we officially shut it down. I'm sure the whole core versus knots debate is now getting kicked into overdrive, and they're like, see, I told you, this is a nation state attack. Look, we have the op return message to prove it, which really leads down to another conversation that these institutions, these powers that be, however you want to frame it, they're not as naive as you might like to believe. I think they really understand what is going on here, but publicly they have to tell you, oh, we got to, research this, look into this. It's not safe, et cetera, et cetera. But I think they're way more versed in how Bitcoin actually works and how these exchanges actually works than they lead us on to believe. So I don't know. I thought that was insane. Not only did they shut down an exchange, they sent an op return message telling us they shut it down before we even got the official press release. Like, we live in some chaotic times, to say the least. Absolutely insane. Anyways, Mitch, what's your thoughts on this, man?
Yeah, I mean, that's like they're dancing on the grave, right? It's the Fortnite emote where after you shoot the guy, or Fortnite emote where you shoot the guy and then you know, L on the forehead, hand in the crotch, dancing all over them, taking their Bitcoin, and then on chain leaving a message, hey, these funds now belong to the Canadian government. It's interesting to see. And you bring up a good point, which is that these institutions, which, like I said earlier, are just people, they probably know a lot more than they're leading on. And not to get all tinfoil hat and all that, but they definitely have people on Bitcoin X that work at these institutions, and they're trying to blend in as normal. So always be vigilant out there and kind of confirm who you're talking to. If you've never met them at a conference and they're messaging you, trying to, incite you to violence or any kind of criminal activity, just be cautious. Don't engage with any of that. So always be vigilant out on the internet.
100%. Yeah, guys, I'm sorry to inform you that the cute Asian girl in your DMs is actually a
not
man.
Like you.
Okay.
And she works for FinCEN.
Yeah, she's actually a Fed. All right, guys. I hate to burst your bubble. I didn't mean to inform you of such bad news on a Friday. But yeah, no, I think that is also a great point. Like, there is a lot of people, and I actually heard a crazy story from a friend, and I don't really want to dox him or like talk about that, but he basically called me. He's like, bro, I think I just talked to a Fed today. And I'm like, what do you mean? He works at a Bitcoin company. He's like, yeah, it was strange. So, hey, as Mitch was saying, definitely be very cautious right now. As we do grow and mature as an industry and in market cap, I think this is only going to get stranger, and we're only going to see even more wild things happen. And you don't want to get caught up in that dragnet here. You don't want to be a casualty here. So to the Bitcoin anons, my OPSEC is burnt here. But for you guys out there, I would take it a lot more seriously as Bitcoin gets bigger, because things are starting to get a little crazy. And I think this is just one of those examples of like, what is going on in the world? We're getting op return messages of seizures from literal authorities here. But am I surprised? Canada at this point, they're super famous for, not liking Bitcoin. It is crazy that they pretty much have like no actual evidence to do this. It's really an attack. They're just like, we don't like this. We're going to basically make any excuse to shut this down. And this is why we always say, hey, if you want to own Bitcoin, if you actually want to own Bitcoin, you need to take it into custody, because they can never shut off your Bitcoin savings. But if you leave it on an exchange, you could wake up overnight and that Bitcoin's gone. So if you've never secured your Bitcoin, if you don't own a Bitcoin wallet, the more examples we give you, hopefully one of them gets you to the point where you buy a hardware wallet and you start taking your Bitcoin into custody, or at the very least, a hot wallet until you get a hardware wallet. Like, you need to take this Bitcoin off exchanges. If it's just sitting on an exchange, it's liable to one day not be there. And you do not want to be in that position. We've seen this happen so many times in Bitcoin's history that this is why we constantly tell you this is like the most important thing to be doing, is securing your Bitcoin. So anyways, let's keep it moving, because I really want to get into this conversation about the end of the 4-year cycle. Spicy takes to end up on Friday. We'll be right back in 1 minute.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, bitcoinben.io. If you're into freedom, Bitcoin, and building a real community, this is for you. Gain exclusive access to real-world, members-only, private clubs across the globe, featuring poker nights, expert-led classes, co-working spaces, educational meetups, live events, and more. Current locations include Sarasota, Nashville, Boston, Dallas, Las Vegas, and St. Louis, with new clubs launching soon in West Palm Beach, Scottsdale, Alabama, and beyond. Not to mention Bitcoin Ben's resorts in El Salvador. There's 3 of them, and they're absolutely beautiful. You'll also get access to the first fully backed Bitcoin bank with fiat ramps and savings accounts. It's called Private Key Bank, and you guessed it, it's based out of El Salvador. Go peer-to-peer with Bitcoin bulk buys, tap into home equity for long-term Bitcoin growth, and join their exclusive mining pools if you're interested in mining. What are you waiting for? Head over to bitcoinben.io, join today, where Bitcoin meets freedom.
Okay, guys, we are back. All right, Mitch. Floor is all yours. As I was telling you guys, I've literally been quoting you on the show multiple times since you first started sharing this meme, and I will pull up what you just shared. So we're going to just have an open discussion here, or rather, it's going to be Mitchell making the case that the 4-year cycle is over. And then we'll chat about it a little bit. So I'll pull up this, what you just shared with us, Mitch, and here you go, man. Why do you believe the Bitcoin 4-year cycle is over?
Awesome. Thank you, Opti. Well, feel free to stop me at any time too. If I say something and you're like, that's stupid, I disagree, let's talk about it. So to start, fundamentally, something's different since the ETFs were launched. And we talked about this a lot at the beginning of the show, but this chart here simply shows the Bitcoin price action with post ETF over here shaded in gray. The largest dip since the ETF launched is 30%. Pre-ETF, we had 4 instances and where Bitcoin drew down 75%. Totally different ballgame after the ETF was created. Furthermore, we don't have these massive blow off tops. So this green area on this chart here, it shows the year-over-year percent change in the Bitcoin price. And so since the ETF was created, it's consistently been 50% CAGR to 100% CAGR every year. Bitcoin hasn't been down on a year-over-year basis, but it also hasn't had these explosive moves to the upside. So yeah, to start, fundamentally something's different. And we'll continue to unpack this. Volatility, it's down on all time frames, a month, a quarter, a year. After this red line, that's the ETF. Volatility is much lower than it was pre-ETF. Same story. On-chain data, when we look at realized profits and unrealized profits, this here, post-ETF, there's not these wild extremes of massive unrealized profit or loss. Same when you just look at realized profit and loss on-chain. So when you measure the price of Bitcoin at the time a UTXO is created versus the time that UTXO is sent, you can gauge whether or not that coin effectively sold at a profit or loss. When we adjust it for market cap, post-ETF, consistently, the market's realizing profits, but it's not at these extreme multiples that it was before the ETF. So something's different. Fundamentally, what has changed? Now we can unpack what that is, which, as we've talked about, a lot of it is institutions. So this chart here shows Bitcoin's market cap in black and the realized cap in orange, which is the sum of all Bitcoin based on the price they last moved. So right now, realized cap is about $1 trillion, which means $1 trillion has been put into the Bitcoin network to be stored, to have that value stored. And this green line simply measures the multiple between the market cap and the realized cap. So when the green line goes way up, the market is pricing a huge multiple on inflows into Bitcoin. So new capital comes into the market reacts wildly. You can see that here in the green line. Sometimes, though, in bear markets, the market reacts totally opposite to capital inflows or capital outflows. And so that's when the multiple here goes to extreme lows. So you could see massive volatility in the multiple. And it's like Bitcoin was this nascent technology. The market wasn't sure how to price it. It reacted super wildly to inflows. But again, the same story post ETF, the reaction to inflows is a lot more consistent and predictable. The market value to realized value ratio is oscillated in this range between 1.5 and 2.5. And remember that for later as we dive a little bit deeper. This is where I start to nerd out a little bit on the report using my my vibe coding skills now with statistical analysis. So if you do a logarithmic regression in statistics, this just tells you have a dependent variable and an independent variable. So the independent variable being the realized cap or inflows into Bitcoin, and the dependent variable being the market cap or the price. So how does the market respond to new capital inflows? And what's interesting, obviously, straight line up and to the right. So there's a strong correlation between inflows and the price. Of course, that makes sense. But how the market reacts to that specifically has changed a lot post ETF. So this is the volatility of the residuals. So the difference between if you have a realized cap value of X, and based on that value, you would predict the market cap to be Y. How far off is your prediction from the actual market cap? That's what this line tells us. And so before the ETF, huge variance in the residuals versus post ETF, it's a lot lower. And then this is probably my favorite chart in the whole report, is this box and whiskers plot, which plots the residuals. So this difference between how we would expect the market to react to inflows and how it actually reacts. Pre-ETF is over here on the left. You've got a huge range, a huge spread here. These lines are the IQR, so the interquartile range, and the dots are just the actual raw values. Post-ETF, the spread is much, much tighter. And so the story here is that after the ETF, you don't have this irrational, retail-driven, boom and bust, like unpredictable reaction to inflows. Now the market is basically one-to-one reacting to capital inflows. Now, there's still a multiple, right? If we go back to this chart, there's a 1.5 to 2x multiple on capital inflows coming in, but the variance is far, far less than it was pre-ETF. It's a lot more predictable. And then so we can kind of unpack previous cycles, right? Because that's the idea of this report, is the 4-year cycle is over. What caused the 4-year cycles? Well, the halvings. That's what happens every 4 years. This is the core ethos behind the 4-year cycles, is that these halvings create a supply shock, which causes an exponential boom in the Bitcoin price, followed by a bust. And there's some truth to that. But when you look at the numbers, the 2024 halvings relative impact of supply and demand is nothing compared to the 2012 or the 2016 halving. It's simply a matter of there's already something like 20 million Bitcoin in circulation. Dropping the amount of Bitcoin mined daily from 900 to 450 is not driving the supply demand dynamics to cause this massive boom. You've got Saylor and these institutions buying thousands of Bitcoin every single week. That marginal decrease in supply issuance, almost irrelevant. I said this before we started the show, but the news cycle to watch out for is long-term holder supply and just holder behavior in general. So I probably should have zoomed this chart in a little bit more towards this specific time frame. But if you pay careful attention, what you can see here is in the orange, this is the change in supply held by long-term holders. So that's about 6 months on chain. We might think of a long-term holder as someone who's held for 10 years, diamond hands, but from an on-chain perspective, it's about 6 months. And you could see here when the Bitcoin price goes up, you see them start to sell. So that's this drop in the orange, the drop in the orange value here. That's long-term holders. They sell into strength. And we put ourselves into the shoes of the new market participants, these institutional guys we talked about all show that came in after the ETF. For them, a 50% return is God tier returns. If they can get that in a single year or 6 months, like that's, they're getting their quarterly bonus. They've done great. They're used to stocks, which might give them 10 to 15% on a good year, or bonds, which could give them 5% on a good year. So if they've held Bitcoin for 6 months and all of a sudden, Bitcoin goes up 50% because of, various catalysts in the market, they're going to sell into that. And we can see that on chain. We can see since the ETFs were created, initially the ETF was created January of 2024. Bitcoin was $40,000 a coin, roughly. It went to $60,000 before the end of Q1. And we saw on chain, all these long-term holders sold some coins. Again, in Q4 of last year, Bitcoin went from 60K, Trump wins, huge catalyst in the market, Bitcoin goes to 100K, long-term holders sold into that. And so this has far more of an impact on supply and demand than the drop in issuance. And so instead of seeing the supply shock happen every 4 years, it can now be on 6 to 12 month terms, because all we have to do is just see what the coins are doing on chain. Are they being accumulated? Are they being distributed? What's going on there? That's the new supply side catalyst. And then if we look at other digital assets, this is the one part of the report I'm a little iffy on. I think that I probably could get the most pushback, because Bitcoin, there's no one-to-one thing to compare it to. Bitcoin's way different than Apple stock, Amazon stock, Google stock, but the market has kind of treated them very similarly. Obviously, they don't, they're not non-sovereign with no issuer, finite supply. They don't have that, but the markets have treated them very similarly. You ask any TradFi guy, they're, Bitcoin's just another tech stock, whatever. Not true, but that's how the markets trade them. And historically, this was the trend for tech stocks. Super volatile early on. You had massive booms, massive busts. This chart here just shows the annualized volatility of some of these popular tech stocks. It's all adjusted for their IPO, or in Bitcoin's case, the Genesis block. So early on in their history, this black line's the average of them all. Incredibly volatile for the first 100 months, 200 months. It's the first roughly 5 to 15 years. Bitcoin, super volatile, diminishes over time. Tech stocks, super volatile, diminishes over time. This chart here shows the drawdowns in some of these tech stocks. So you can see, again, same story. Early on, lots of big time drawdowns, but over time those drawdowns have diminished. I think Bitcoin reasonably follows suit, given that it's traded similarly to these assets in the past. I put this chart in here because I don't think Bitcoin's not going to be volatile. Obviously, if you compare it to stocks and bonds, still super volatile. I think I mentioned at the top of this segment, the largest drawdown in Bitcoin's price since the ETF was created is 30%. For Bitcoiners, that's nothing. That's I can
walk in the park.
Yeah, dude, literally walk in the freaking park. I held through a 75% drawdown. You've held through a 75% drawdown. 30%'s nothing. But for TradFi guys, that's like the end of the world. That's, all the sky is falling, Chicken Little. That's a disaster. So Bitcoin's still volatile relative to traditional assets, of course, but relative to Bitcoin's history, not so much. And so then I don't like to make price predictions. So I kind of leave it up to the reader and to the listener. What do you think the price will be? Because Bitcoin, we mentioned, it's going for every single store value asset in the world. That's $1 quadrillion worth of value. It only needs a couple $1 trillion of capital inflows to get some really, really high prices. So this is like a 3-dimensional chart here. You've got the realized cap on one axis. You've got the market cap multiple on the other, which I put the range that it's been post ETF, which is about 1.8 to 2.5. And then on the Z axis here, it converts to the Bitcoin price. So, if Bitcoin, and I'll actually fast forward here, but we'll go back to that chart. This is the realized cap post ETF. It's grown at an annualized rate of, no joke, $420 billion every 12 months. If you just continue that rate into the future, which I think is a bearish case, right? Because we have more Bitcoin treasury companies being created, more MicroStrategy preferred stocks being created, all of that, that's more funnels connecting TradFi to Bitcoin. The more funnels there are, the more capital that can flow through them. Also, the actual amount of dollars in liquidity in the system is increasing. So that's also more capital that can be put into Bitcoin. But for the sake of being conservative and not too moon boyish, let's just assume capital goes into Bitcoin at the same rate it has since the ETFs were created. That gives you a realized cap between 2.5 and 3 trillion by 2030. When you take the range of multiples that has existed post ETF on the market cap, that gives you a Bitcoin price of anywhere from 230,000 to 320,000 by 2030. Which
bearish.
No, I know it's super bearish, right? But I think Bitcoin bores us to death along the way. But this is, when you math this out, like, this is still crazy returns from a TradFi perspective. And that's who's in the market now. That's who's dictating where this thing goes. So there's a lot there, and we can unpack all of it right now.
Yeah, no, I mean, first of all, hold on. Some bars, absolutely incredible data to back up your thesis here. I've literally just been more, left side of the bell curve. I'm like, guys, just vibe this, like your gut feeling. Look at the price chart since the ETF was launched. There is a fundamental change in how the structure works. And I've really been, and maybe this is something you can add on to your analysis, but I was really looking at the S&P 500 and just looking at how the S&P 500 moves. Here, actually, maybe I'll pull it up, because I've done this before on the show. But if you just look at the S&P 500 and you look at what Bitcoin does, it's starting to look exactly like what Bitcoin is currently moving. So here we got Bitcoin. Let me pull this up for you guys. And don't mind my indicators. I've been using some Jim 168 indicators. I really like them. I don't know if they're right, but hey, it makes me feel better. All right, so look, this is the weekly chart. Obviously, the infamous boom and bust cycles with like a U, and then we got that double top that was really strange. But ever since the 2023 bottom, it's just moving in, this straight line, straight line up. It's just like super boring. Super boring, just boring up. And I was looking at the S&P 500, and I will pull that up for you. And this is where I initially kind of started feeling the same thing that you said. And I'll zoom out. So it's obviously not like a 1-to-1, but you can see like the structure is pretty much the same, just straight up and to the right. Yes, there's some kind of boom and bust cycles. The drawdowns are a lot less, but like this is the S&P 500 in 1 month candles. Again, I'm going to go back to the Bitcoin, and we'll do it in weeks because we don't have as many months here. But you can see here's the month one. So it doesn't really look the same, which is why I'm saying it's not really like 1-to-1, but it's starting to look the same thing. And that's where I originally kind of started to really dive into what you're saying, because I've been seeing your tweets and I'm like, just on a gut feeling, since the ETF's launch, since there's like a new investor in the Bitcoin space, you're starting to see that the market structure has changed. And what's that one fundamental driver that's changed? It's the ETF has been launched. And of course, institutional capital is coming in. And this is why I've been saying on the show for you guys, and I've been getting trolled and some people like it, of why I'm now looking at the macro markets, not to be like a macro think boy, but essentially to try to understand what their psychology is and what their signals are and what they're trading against, because that's where all the capital is coming from. And so this is why I'm looking at the macro markets, and why I even care about the FOMC meetings and stuff, is because they care about it, and they're the ones trading this thing now in size. They're the ones that are moving the Bitcoin price. And so I originally kind of got that idea from, wow, I just spit everywhere. I originally got that idea. My mouth's cotton mouth from too much coffee earlier. From just looking at because you guys know I look at bond yields, and I'll look at gold, and I'll look at the S&P 500, and I'll look at different, currency exchange rates now. And one day I was looking at the S&P 500, and I was looking at the Bitcoin price since the ETF launch. I'm like, maybe this is just a very low IQ take, correlation, causation type view. But I'm like, it just looks identical now. And the only thing that I could really attribute that to is there's a new investor, there's a new person buying Bitcoin, and they're trading off different signals. And so, man, I vibe coded this take, and you just backed it up with all the data. I didn't see the full report. I've seen you tweet a couple of these things, but I think you made a very good case. Now, I think for everyone in the chat, they're probably going to ask a few questions. Obviously, the first one is, so volatility is over, no more parabolic runs, but that also means no more bear markets. You think that's a fair way to characterize this?
Yes, that's pretty much my thesis in a nutshell. I think the 30% drawdown that we saw in 2024, that's generally the new normal bear market. And it's kind of funny with this thesis I've been promoting over the last couple months. Some people say I'm bearish. Like, you jokingly said I'm bearish because I think, Bitcoin 300K by 2030. Other people will say I'm bull-hearted because I don't think Bitcoin's going to have a 75% drawdown. So I feel like the fact that I'm getting pressure from both sides in a way gives me some more confidence about it. But fundamentally, I don't think that we have these 4-year cycles anymore, because the halvings are not as impactful in the supply-demand dynamics. I think you have to look at other stuff. Like you said, you got to follow these macro indicators. Now, you don't have to. If you want to totally tune out the Bitcoin, just dollar cost average and accumulate and have a 10-year time horizon, none of what we're talking about here really matters. But if you're watching a Bitcoin news show, you probably don't want to tune out everything entirely, right? If you plan on spending any amount of capital within the next year or two, you probably want to follow some of this stuff that's going on. And one of the primary catalysts for Bitcoin is the macro side of things, which is fiat liquidity. And I think an interesting dynamic, though, is like the more that the fiat liquidity expands, the more, the longer that inflation remains consistently high, the more that these problems caused by that will perpetuate, which could accelerate Bitcoin adoption in some sense. So I think, liquidity has been on an upwards trajectory all year long. I don't think that will stop going into 2026. So I think 2026 is going to be a green year for Bitcoin. I think, Opti, you're going to have me on the show again, December 2026. Bitcoin's going to be up, and it's going to, the green, 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 red will be gone. It'll be green, 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 green. And we're going to be able to look back on this moment and say, yeah, we called it. You with your vibes analysis, me with the data to back it up. I'm a fan of both, and I think both have their position in the world.
Yeah, no, I mean, look, I've said this before on the show. I've said both things I'm going to say on the show. One, I'm like a junkie. I'm jonesing for some parabolic moves like this, just barely kissing all-time high and then goes sideways. Like, I'm getting bored to death out here.
Tease. I know.
It's a tease, man. And you're just like, like my dopamine receptors are just so fried. Like, I only get excited when I see the price start running. And I'm like, man, we're not going to get those anymore. Like, man, Ponzi's really over. This sucks. Like, this is not what I signed up for. But on the flip side, like going all in Bitcoin, obviously when I got into it, but going all in like with my work and career as well, like the bear market was pretty brutal. And if I could avoid a bear market like the last one that we went through, I think I'd probably be less stressful. I think I'd be okay with no more 75, 80% drawdowns. If, that, I guess, the trade-off is we don't get 10x returns a year, or, in a cycle. I mean, look, I want the 10x returns, but I'm also okay with my savings not getting decimated by 85%. So that would be a lot easier. Now that I'm maturing, I'm getting older, I'm like, okay, I'd be okay with my savings not getting destroyed here, and I got to figure out how to survive. But man, I'm jonesing. I'm joneses for the parabolic run. But
I'll add one thing to that. I think a lot of the people that are like, no, you're an idiot. Of course, we're gonna have another 75% drop. It's cope. It's cope because those people did not buy in 2022 when we were down 75%. That was it. That was the moment where you should have been fully porting into Bitcoin. And if you did that, you've had a great last 2.5 years, 3 years. You're up over 500% if you bought Bitcoin when FTX went under. It was $16,000 a coin. We're at $116,000 now. So that was the chance. Now, that's not to say, you're too late to Bitcoin, you missed the boat. If you continue to dollar cost average and accumulate sats every single day, even if Bitcoin has a quote unquote modest compound annual growth rate of 25% over the next 10 years, you're going to crush it. You're going to do fantastic. You're going to be able to provide for your family and all of the things you want in this life. So you're not too late to Bitcoin, but I wouldn't snort the hopium that you're going to get another chance to buy Bitcoin under 50K.
Love it. Okay, there is one thing that I do want to hit on. You were mentioning that the new thing we should probably be watching is the inflows from these institutions. And you're not the only person that I've seen recently say that. Again, I've been following his name's like Jim186 on Twitter. He was literally he's like the first power law guy to say it on the Bitcoin forum. But I really love his analysis recently in regards to like all the markets and Bitcoin. He's super bullish. But he recently said that same thing. He's like, look, guys, you got to acknowledge what's going on, and the institutions are the ones that are here. Retail hasn't been seen. I've been giving you guys the data on this constantly on the show. Like, retail is nowhere to be found. I don't know if you guys look at the charts, but like volume's low. The more heuristic based perspective of Google Trends, like it's just not there. So retail isn't driving the price of Bitcoin anymore. And if you can accept that, then obviously it's institutions that are driving the cycles now, or rather the market of Bitcoin. And like you mentioned earlier, now that we are kind of getting to these points where the halving cycles aren't really, affecting the amount of Bitcoin that's being distributed, there is a new driver going on. And he also was saying it's the inflows from institutions going into ETFs or buying into corporate Bitcoin treasuries. So, and you had what? You said 480 billion is kind of the yearly inflow that you kind of extended out to get those 420. Price points? 420. Okay. Yeah, of course. Of course it is. Now, I know you were joking and saying it's, it might sound bearish or conservative. Like what you did is just mapping the current demand from the institutions.
Right. And
what we're seeing, I think even the news from today is like, that's most likely going to continue to go up. So if you think that Mitchell is being bearish here, 300K by 2030, like we're just using the current data. That's not to say, and I don't think black swan's the right word to say, but the unexpected, or rather more expected view that these institutions are going to come into Bitcoin in force, those numbers are going to go freaking, they're going to continue to go up. So even your bullish chart is like, this is like, if nothing changes, this is what the price is going to be.
Which is not my base case. I think we're going to see more Bitcoin treasury companies, more non-US markets reach. We're going to see a lot more institutional adoption. The red tape's going to fall off. They're going to come in. And I want to second what you said about the absence of retail. Retail was in full force in 2021 because everyone got a $1,200 stimulus check. Now retail is broke. They are living on credit cards. They have 3 roommates. They can barely afford to pay their bills. Of course, they don't have any money to throw at assets. And if they do, they're going to put it into DraftKings or Coinbase or Solana, whatever. So
go play Plinko ball on stake or whatever.
Yeah, exactly. They're going to be buying lotto tickets, like that kind of thing. So unfortunately, I think the difference between like Bitcoiners, I hate the word wealth inequality, but for all intents and purposes, like wealth inequality is going to continue to grow over the next 10 years because you have a cohort of people that are buying assets like Bitcoin and the stock market and real estate. And then you have a total other cohort of people that aren't doing anything like that. And the currency is going to continue to debase. Those with assets are going to get wealthier and those without assets are going to get poorer. And so, if you think there's tension in the world now, I promise you it's going to probably get a whole lot worse.
Yeah, I'd totally agree with that. 100% would agree with that. As we're seeing, where like, if there's a pendulum from like peace and chaos, I think everyone looking at where we are right now, we're teetering towards the like over the cliff of chaos. Like things are going to continue to be even more extreme. It's just things are wild right now. Okay. Last question. Actually, Chad, if you guys have some questions, ask it in the chat and I'll look it over. Mitchell, looking, on this thesis of the 4-year cycle being over, what is your take on a bullish Q4? Because I'm still betting on a bullish Q4 here. I think we're going to see the end of this year to see some real action in Bitcoin. And I actually have a good chart that I'm not going to bring it up, but essentially it's saying something on the lines of like 60 or 70% of all the gains in Bitcoin historically over a 10-year time span happen after October 3rd. Q4 is usually when things get super bullish. So does your data end of the 4-year cycle, does that kind of negate that idea that Q4 is still going to be bullish?
Not at all. I'm very bullish for Q4. I think there's a few things we can look at. One is long-term holders, they sold off when we hit 125K, but that sell-off has more or less ended. We have gold making new all-time highs. We have this S&P 500 making new all-time highs ceaselessly. We have rate cuts coming in. I'm very bullish on Q4. I'm not bullish enough to think that we're going to go up 10x and have this massive blow off boom and bust.
Yeah,
but
I'm not saying that.
Yeah, I think Bitcoin makes a new all-time high before the end of the year. Certainly.
That's still bearish, bro. All-time high. That's a freaking 6% gain by end of the year.
Isn't it weird how we're only 7% off the highs, but it feels like we've been through a drastic bear market? I don't know if you agree.
Yeah,
you've got the core versus Knots people fighting. You've got all of the Bitcoin treasury people, not the companies. I still think the companies are going to rebound, but the retail degenerates that weren't into Bitcoin at all, and then the treasury companies got their attention. They're totally tapped out now. I think it feels like a bear market, but we're only like a finger snap from an all-time high.
Yeah, no, 100%. I mean, if the historical data does kind of stay with us, October, November are going to be super bullish. And I was actually talking with a friend, and he's like, the only other time we had a green September, or actually maybe it was 2 times, I forget the data here, we got 150% increase over October and November. And so I'm with you, and I think what you're saying does align with that idea, hey, we could see 250 by end of the year, and that doesn't necessarily mean we're going to see a 10x parabolic blow off top. It'll just be kind of like this slow, maybe it'll go sideways until October, and then it pumps. It'll go sideways, and in November it pumps a little bit. So maybe that's how this works. Who knows? But I do want to finish this up with something we said earlier, is this idea of slow and boring to $1 million. The stairway to heaven. It's going to bore us to death. But it does seem, if you're looking at the chart, what's going on with the price right now, it's just like a stepwise function forever, up and to the right forever, but no more fun and no more fireworks.
Yeah, more or less. And I think that's part of why you've seen the Bitcoin treasury thing blow up this year. I think reason number one is you had Trump get in and deregulate, and that gave a lot more companies confidence to go into this. But 2 is people in the Bitcoin world are actually craving more volatility because Bitcoin's gotten a lot more boring than it was historically. So they're going into all of these treasury companies to try to make, I think someone, maybe it was American HODL, said, altcoins are not a time machine to becoming an OG. Neither are Bitcoin treasury companies, but I do think there's value there. I think that's the way that more capital gets into the Bitcoin ecosystem. Just like the ETFs, Bitcoin treasury companies offer a product market fit to the TradFi world. So I am bullish on Bitcoin. I just don't think we get this 10x in a 12-month span that it's done historically, but that's okay. It's still going up and to the right forever.
Man, there goes all the fun. I thought we were going to get bullish here. Now it's just like, guys, it's over. The Ponzi's over. We're trading the S&P 500. Dude, we're boomers now. We just trade the S&P 500.
We're selling covered calls. We're trying to get cash flow. We're listening to Fed meetings. I know. Wrap it up.
Yo, what happened to us? When did we get old? What is happening? Oh, man. All right. Well, Mitch, I think you absolutely killed that segment. I don't know. Do you have anything else you want to add? Is there anything we didn't touch on?
No, the only thing I'll add is if you're interested in accumulating Bitcoin, Blockware makes it really easy to mine Bitcoin. And we talked about this the last time I was on the show, but you can write off 100% of the cost of mining hardware thanks to new guidelines from the Big Beautiful Bill. So if you buy $100,000 of miners, you can offset $100,000 of income. So starve Uncle Sam of his precious fiat and stack sats. It's a pretty good deal. I think so.
All right. Someone on Rumble says, Opti, show a chart of S&P and call it a Bitcoin meme for the chat. I already did that, bro. I already did that. Okay. Though, again, before we run out and I forget, I am giving you guys sats. So make sure you pull out your Lightning wallets. I am getting ready over here, logging in, and we will give you guys some Bitcoin. So again, as I mentioned, when you sign up to Bitcoin Well, you get these Wishing Well rewards, and you get a chance to win 1 million sats. We'll see if you guys are lucky enough, if someone's lucky enough to get 1 million sats today. So here we go. We're going to play it live. Hopefully your Lightning wallets are ready. All right, while we wait, man, Mitch, I think you absolutely killed that. I love that you had the data. All right, there you guys go. First one, first come, first serve, 540 sats for you guys. Again, this is why you should watch on your television, because we give away free Bitcoin. Well, when we remember, we give away free Bitcoin. I kind of forget. But yeah, no, Mitch, I love those charts, man. It really does show what I've kind of been feeling. And I think, as you said, all of the fighting that we've been seeing, us here on the show just being super bored, like it does feel like a bear market because we're all just like being bored to death and we really don't know what is happening. And we won't know until, the end of this year, beginning of 2026. But I think having some data, obviously maybe it's like my monkey brain, just like seeing pretty charts and data. I'm like, hey, it's confirming my bias. I totally believe this. You made a hard case to debunk there. It does seem to be, Bitcoin does seem to be losing volatility up and down. Mm-hmm. Those correlations to tech stocks is definitely one of the big memes right now. Like, Bitcoin's just technology. It should act and trade like tech stocks. I think the biggest thing for me is obviously the ETF. And since institutions are here, it's like you can't teach an old dog new tricks. And even though they have this new, very amazing technology, a new money here, they're still going to trade like they're used to. And I think the biggest point for you is like, hey, making 25-50% in 6 months, that's like a freaking killer year for people. Yeah. And they just lock it in. It's like us. I don't know if you did the same thing, but when I first got into Bitcoin, I put like $100 in, and the next day it went to like $110. It went from like 10,000 to like 10,000, like $10,000, $100 or 11,000 or something. And I got a 10% gain, and I was like, I'm a genius trader. Let's sell this. And then it kept running. I'm like, oh shit, like I don't even have enough money to buy back in. I'm guessing that's what a lot of people are doing. They're like, hey man, lock in 30% gains. I'm going to be cool. I'm going to look like a genius. So we are seeing there is a new investor in the market. There's a new animal spirit that's being injected into Bitcoin. Yeah. And for better or worse, it's coming from Wall Street. Like, you're better off not like being mad about it versus trying to understand their psychology and what they think and how they kind of act in the market, so you can position yourself better and you don't give yourself false hope. But with that being said, Mitch, I still do have false hope We're going to pump Q4. It's gonna get frothy.
I won't do that, dude. I'm fully long with my personal capital, my career, my reputation. It's all long Bitcoin. So, if I'm wrong to the upside on this, like I'll be wrong, but I'll have made a lot of money in the process.
Hey, we'll be all right. We'll be okay.
Yeah.
I mean, hey, look, I will put a wrinkle in here. This has no data. This is just vibe. This is just vibe mashing what Mitchell said. We're going to get a parabolic blow off top, but we're not going to get an 80% drawdown. Okay.
That's it. That's the hopium. That's what I want.
Yeah, that's the opti-hopium for Friday. Anyways, guys, I think I'm lagging over here, so I gotta get off here today. But go follow MITCHELLHODL. He's one of my favorite Zoomers out there. Absolute goat. This kid's killing it. It's going places. I wish I had Bitcoin at your age. My life would be completely different. So good to see you, Mitch. And I'm glad to be fighting in the trenches with you, bro.
Likewise. I always enjoy coming on the show. It's been a blast.
Let's go. The deal. I think my internet's lagging on here. Yeah, I think I'm cooked. All right, so see you guys. Is this working?
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.